arm wrestling, from the arm wrestling community, if you're seeing this on a share, and you are not subscribed to John's channel, Serious and Silliness, you need to do so ASAP, because we are talking about a platform that is not geared directly towards arm wrestling, but rather a bunch of other cool stuff, bodybuilding, powerlifting being the primary niche, and a lot of other guy related stuff. He's found our sport, and he has really, really gone out of his way to not just get involved in our sport and promote it, but he's also doing a great job with promoting the women's arm wrestling as well, which I think is extremely commendable. So if you're watching this podcast and you watched it to the end, please hit like and subscribe. We got to support the people who are supporting us from the outside.
Thank you very much, man. I really appreciate that, man. It means a lot to me. Seriously,
it means the world to me that podcasts like you and the time that you're spending to get involved in our niche sport, that you're taking the time to do that. Because, and the reality is people like these podcasts are not, this is work for them. They have to schedule it. They have to record it. They have to edit it. They have to make thumbnails. This is work. And anytime somebody's doing work for the arm wrestling community, we need to pay it forward.
Thank you, brother. Thank you. All right. I got my favorite arm wrestler, Paul Linn, back, but this time we got a little bit different interview today. We're going to be talking with his business partners and his latest business venture in cryptocurrency. And he has to explain to me what the hell it is, because for the life of me, I have no idea.
All right. So I'll give you, listen, I ain't the sharpest knife in the drawer. I wear that on my sleeves. But I understand it from a layman's term. So I can give you the general rundown on kind of what we do.
Okay.
And then I got Marshall and Jesse here, who are much more intelligent than me when it comes to the technical aspects of cryptocurrency as a whole. So matter of fact, Marshall, you want to go ahead and explain cryptocurrency in general, like the currency, and then I'll take over from the mining aspect.
So it was created so there wouldn't be big banks that are in charge of the financial, the money. So it basically works on a blockchain, like an open ledger where everybody can see the open books. And there's computers responsible for securing the blockchain. And the security is done by just how hard it is to solve the math problem associated with cryptocurrency. So each one of these, we have some of the machines here. Each one of the machines would only mine just, how do I want to go?
I'm already lost, so it's okay.
Right. So cryptocurrency as a whole is an idea of essentially assigned value to whatever the people assign the value to. So decentralization away from formal banking. Okay. For me to tell you that I understand cryptocurrency as a whole, or NFTs and all these other great things that we got going on in this beautiful metaverse that we're going to live in here in the future, okay, I would be remiss to say that. However, I think as long as the world assigns value to something and will accept it as a currency tender, then it has value. Perception is reality. So, I mean, it's very, very similar and tracks very closely to our stock market. So obviously Bitcoin is the leading cryptocurrency out there. It was the first. It's not necessarily the best, but because it's the first, it's the highest value.
I got you.
So about 4 years ago in 2017, my partners and I, when cryptocurrency just kind of landed on my lap, as far as younger people that I know talking about it, we decided to throw some money in and buy a couple different cryptocurrencies. Obviously, things went up and they went down. And as we were digging a little deeper, we started talking about the mining aspect. So the mining, in an essence, is if you have a wallet, a Bitcoin wallet, and I have a Bitcoin wallet, and you ship me something, goods or services, and you want paid in Bitcoin, I can send a transaction from my wallet to your wallet. It is then encrypted by a very, very detailed algorithm that has to be solved in order for the funds to come and be released to you. So that, in essence, is the blockchain, meaning all those transactions are locked in a block and protected through an algorithm that has to be decrypted. So what we did in the mining aspect was dug more into the mining and decryption aspect, which is also rewarded in the cryptocurrency, whichever algorithm and whichever cryptocurrencies fall under that, you can choose to be rewarded whichever ones. So
it's very similar to how US dollars works. For example, if there's a credit card transaction, that credit card company is going to verify it, and they're going to charge you a certain percent based off of the amount of money that was spent using that credit card, the 2-3%, whatever it is. That's exactly how mining works. It is the rewarded for verifying that transaction. So the decentralized aspect puts the ownership into the user's hands, as opposed to the credit card company monopolizing all the rewards, or the central bank systems monopolizing all the awards. Is individual guys like us are taking those rewards for people making transactions using cryptocurrency.
So basically,
I apologize, Paul. I'm sorry.
No, go ahead.
When you say it works like US dollars, I understand that US dollars is backed by commodities, though. Like originally it was gold, and now it is oil. And they call it the petrodollar, and it was the gold standard. And then it shifted to the petrodollar, and that's what values the USD. So if you give me Bitcoin and you say basically it's the confidence in which we have in it that gives us its value, how do I measure that?
It's the network. There's tens of thousands of computers out there right now trying to solve this problem. It takes a lot of energy to solve the problem. That's where the value is because it's so difficult to solve, is what gives it its value.
Okay. All right. I mean,
it's a lot like gold. Okay. It's supply versus demand. The larger the supply, the less the value the gold's going to be. The lower the demand, or the higher the demand, the less supply is going to increase its value. That's how Bitcoin works. There's only 21 million Bitcoins total. So we're down to the last several million. So the demand is way up.
Right, but then you just move on to the next cryptocurrency, as Paul stated.
You can, but most of those pair with Bitcoin.
You can't do that with gold. You can't go, oh, gold's almost gone. Now we'll just pick gold. We'll pick silver. It doesn't
but
work
silver's
that way.
worth so much gold.
I'm sorry?
So much silver is equal to the same amount of gold too.
Well, it would be a tremendous abundance of silver that would be equal to gold.
We're not in total. What I'm saying is, to say you had an ounce of silver, you could have 900 ounces of silver is worth 1 ounce of gold.
So compare that to Bitcoin, to the latest cryptocurrency.
So, well, one Ethereum is about $3,400, and one Bitcoin is worth about $4,600. 46,000. So Ethereum, there's many more of them though.
So you're telling me what basically backs cryptocurrency is a mathematical formula.
For some. So there are several types of cryptocurrencies too. There's proof of work, which is mining, which is solving a very difficult math problem to create coins. And then you have proof of stake, where you can actually put your coins up as a backing for the transaction. So when you stake a node, or you stake a node, you would say, these 32 Ethereum, stake a node, I'm going to lock these coins up. I can't spend them, but that's what backs the transactions. Is they would be, my 32 says that transaction is good for it, and then once the block clears, once the chain progresses and it confirms that transaction, then the coins are released, and you keep your 32, but there's a percentage, you get a tiny little bit for doing that.
Okay, you could see how somebody new would be.
It's a lot.
Well, it's not a lot. You could see how what I'm saying is, you could see how somebody new would be cautious, if you will.
Yeah,
right?
Sure.
Oh yeah.
So let's get past my caution. Let's say, okay, I decide to invest with you guys. Okay. Has there been any drops, like the stock market, like commodities,
Absolutely.
or is this since it started has gone up on the regular?
It's extremely volatile. It's more volatile than the stock market.
Okay.
But again, what we're doing is, like, there's no real investment with us. We have our own. Pull that miner over.
Yeah.
So what we did, rather than buying coins, we have bought the machines.
And what does the machine do?
The mining. So if I have the option, this is a Litecoin miner. It's an L3. It's a very basic model. One you can run at your house for basically the cost of running a hair dryer constantly. And half the cost, whatever. But the point is, when you buy a coin, you never have anything tangible. So you have an idea, you have a number in a wallet. You know, if you lose your wallet, you lose your key, you lose all that stuff, it's gone. It's into the ether forever. Never get it back. When you buy a miner, you're hedging the cost of your electricity and the profit that it makes against that coin.
So what exactly does that machine do? So I'm purchasing the machine for how much?
$1,000.
Okay, so $1,000. And if I wanted to buy it in Bitcoin?
It would be 0.02 Bitcoin or
The
something.
US dollar equivalent in Bitcoin.
Okay, so then how do I utilize that machine to work for me?
It uses, so the machine does all the work. It takes electricity, about 750 watts of electricity, or half of a space heater. And it takes internet, but very, very little internet. The internet is just where it sends its completed work back to the pool to confirm that it did what it says it did. They're so hard to mine, where one miner, you would never, ever make any money. So what they do is you join up with thousands of other people in a pool, and you get paid the equivalent amount of work. So however much work you did, you get that percentage of the reward when the block is solved. And so the machine just sits there and tries millions of times every second to solve an exceedingly difficult math problem.
Right. So think of like a very hard combination lot, and with like billions of options. And all the machines are putting their computing power in, and they're trying 1, 1, 1, 1, 1, 1, and then 1, 1, 1, 1, 2 until one cracks it. And when one cracks it, when you're in a pool, your proof of work is based off of what's called mega hash or hash rate. So each machine does a set amount of hash rate, adds to the total hash work and computing power of the pool, and then it's quantified by the work that you did, and you get rewarded in the coin in which you're mining.
Yes.
So to me, as far as my perspective goes, I will never purchase any more coins. I will only mine them, because you're vastly hedging your bet.
Okay, so you buy this machine, you plug it in. Does it work on 120 volts?
Yes.
Okay.
This one does. Some do, some don't.
Okay, so you buy a simple machine, you plug it in, and how does it get the equation? It just has it, or do you have to feed it to them?
It gets it from the pool. So when you first set it up, you'll go to a website. The pool would be a website. You go to a website, you create an account, and then you add your machine. It would be called a worker. You would add that to the pool. And then once it's in the pool sends it to work, and the pool receives the completed work, and the pool pays you out. You put your wallet address right in the pool sends the reward directly to your wallet, and then it's yours.
Okay, and you only get paid when the machine solves this particular formula. No.
So yes. So each machine is going to be a specific coin. Each coin is going to use a different math problem or a different algorithm.
Okay, so I see you. So you buy one for Bitcoin, you buy one for another.
Yes.
Okay, and then the machine works on that particular formula for that cryptocurrency, that specific
algorithm.
Okay,
and that's where this comes from. So you have different. There's two different ways. These are ASIC miners, application specific circuit miners. They are set for a certain algorithm. It is a machine that you do not have to build. You can do what was done in the early days of it, which is GPU mining, where you put together basically gaming cards and build a computer from scratch. That's what Ethereum still mines off of. We have a few of those, but it's just tricky, and they're a little bit trickier to maintain because you have a lot of moving parts in that. Whereas you buy this is out of the box, and you just plug it in, Ethernet, point it at the pool, point your pool at your wallet. You set your payout time. So like you can say, I want to be paid out every 0.2 coins, or I want to be paid out twice a day. You get a ding on your phone, and coin shows up in your wallet.
Okay, so can I only get paid in that specific cryptocurrency, or could I trade it in for other cryptocurrencies? So
there are pools out there where you can point different machines at it and say, this is all of my horsepower, this is all my computational power, and it would reward you the equivalent of it, but you can break it out into whatever coin you want. A specific example would be like prohashing.com.
Okay. So I make some Bitcoin, and I want to trade it in for another cryptocurrency. I can do that with another website, formula, so on and so forth.
An exchange. Yeah.
Yeah,
So-
any of those major exchanges.
Let's say
Coinbase, Binance,
Okay.
yeah, all the big ones.
So now let's say I want to quote unquote cash in. Let's say I make a bunch of Bitcoin or whatever cryptocurrency, and now I want to trade in for US dollars. Is that possible?
It's much quicker than you think it is.
Okay. And can I trade it in for any specific currency? So like, for example, if I want to, like if the ruble is going up, can I trade it in for a Russian ruble?
It's a great question.
It would
I
have
don't
to
see
be
why
on a
not.
Russian-
I don't see why not. I don't see
Right.
why not, but I haven't done it. I don't have any
Okay.
personal experience.
My assumption would be based off of the countries who control those currencies if cryptocurrency is banned there.
Or the exchange that you're on.
Right.
Yeah, and the bank that.
Oh,
like,
I see. Okay. Some countries it isn't. I see. Some countries it's not utilized. Some countries it is. I see. Okay.
Some countries are making cryptocurrency their national tender.
Yeah,
Other ones
really.
are banning.
Yeah.
That's amazing. So as a whole, how has cryptocurrencies been doing since it started? And this is relatively
Basically
young.
straight up. It's basically straight up. It's had 3 cycles so far. Each
Mhm.
cycle has been a long period of calm, followed by an extreme spike up. And then it'll recover. It'll come back down about 60% of the spike, but it'll still be significantly higher than that long calm. And then it'll be a long calm, followed by another extreme spike. And what happens is each time it starts to go up, there's what's called FOMO, or fear of missing out.
Mhm.
And people see it going up, and they drive it up even faster. And then
Right.
then eventually it goes parametric or parabolic, and it gets to the top, and then the bubble pops. And then when it falls, it only falls to about 60% of the very top. And then it's a long period of calm. We're in the calm now. I don't know when the next spike's going to happen, but that's
So-
just what.
Has this trend been the same with each three trends?
So they all follow Bitcoin. So
No,
if you
I mean
follow Bitcoin,
the actual trend as far as
oh yeah.
so all three have been the same. So can you say with confidence that would be what the future holds for further?
No.
No. So it could be very, okay.
I'm not gonna promise you anything.
You can't.
but
Yeah,
that-
there's no
Okay.
But I
promises.
can tell you, looking at the previous trend, that's what it's done over and over. If you just go to Bitcoin and you look at the graph from when it started, you're going to see calm, spike, and then we're just past the last spike, but we're in the calm now.
Okay.
Yeah.
So good.
There's tons of speculation involved. So really it comes down to what you believe as far as where this world's going
Mhm.
and what's going to happen. And I just, personally, I see that the advancements in technology, a lot of the stuff that's going on in the world,
The metaverse.
the metaverse, the NFTs, which I can't even wrap my mind around NFTs. I
Right.
want to get involved in these things, but I can't, I can just wrap my mind around crypto.
Yeah, like
I
me. That's why you have
can't
these
get
two
that
guys with you.
Right.
That's why you have
Right, but
business partners. Yeah.
The
I love
reality
that.
is I believe Bitcoin. I think we all believe Bitcoin will hit 100,000 in the near future.
Okay.
I mean, in the very near future. And if we look at some of those ride-along coins that follow the Bitcoin trend,
Mhm.
that have potentially higher futures because they're lower dollars, that's a reason why we have bought so many Litecoin miners, because that Litecoin's sitting at about 130 right now. It tracks Bitcoin, but its fluctuations can be more drastic.
Mhm.
So the chances of Litecoin hitting $1,000 are probably higher than Bitcoin hitting 200,000.
I see. Okay.
And then the percentage gained is that much more. So it's like a horse race. Pick your horse. You know what I mean?
Yeah.
Do some research. Take a
So
look
now,
at
if
technology.
would this be more specific for a short-term investment, or can you do long-term investment like a retirement, or a combination of both?
Well, I don't want to speak out of turn. You guys can interrupt me, but most of the investment people that I follow and watch are saying that you would be remiss to not have 5 to 10% of your retirement assets directed towards cryptocurrency.
Okay.
They're saying that a 5 to 10% asset allocation could potentially double your return in the long run.
Mhm.
And it's that risk versus reward. If you're willing to put 5 or 10% with that chances of that future doubling your retirements, why wouldn't you do it? Why wouldn't you risk 5 or 10%?
Mhm.
So, I mean, I personally look at it as a long-term thing, but I know tons of people that do day trading. I mean, a couple of our partners do day trading. Jesse's done really well with buying the spikes and the dips because it happens daily. Like
Okay.
there's and it's a lot of times it's more drastic than the stock market. So if you're getting a 10% swing daily, you stand a chance to do pretty well. Plus the Coinbase and everything, it's not regulated as much for day trading. It's not really regulated at all.
Mhm.
And then if you really start digging into the long term of some of this stuff, there are passive tax shelters that we don't need to get into online, but with mining, if you mine a coin into your wallet, there is no paper trail on that.
I see.
So in essence, it doesn't exist until you turn it into US dollars.
Okay.
So if there's somebody out there that wants to sell a card to you for Bitcoin, you can have that dollar transaction and there's no taxes on it.
Now, when these equations are being solved with the machine, and you're downloading the formula from the website and installing it to the machine, is there any kind of governing body, if you will, that looks over to make sure that nobody is doing any funny business?
No, not really.
Nah.
Yeah. Long ago, there would be bad actors that would attack the pools. They would do like denial of service attacks against the pools to try and bring the pool down so that mining on other pools would be better. But the technology's come a long way with the firewalls and then the Cloudflares and the stuff where the mitigation where that's not really a thing anymore.
Okay, so basically, it's kind of like the same. You would be the same protection as my laptop, if you will, the firewalls and the virus protectors and so on and so forth.
Yeah, but that's all going to happen on the pool side. Your miner is going to be protected behind your home internet too. So whatever firewall you have, yes.
Okay, all right. So
I mean, a really pertinent thing to think about with this entire industry, though, it is filled to the brim with scams, like to the brim. Like if you say, hey, I want to buy one of these miners and you just jump on Facebook or wherever else, you got about a 90% chance that you're going to get scammed. So when we started getting involved in sourcing these miners, and our end game here with this facility that we bought is to basically have a 3 megawatt facility where we can host, I don't know, upwards of 1,000 machines, meaning obviously they cost money. So we don't have the upfront capital to fill our building up ourselves. So we would offer a hosting where somebody doesn't want to see the machine. They don't want to deal with the noise and the heat that it puts off. They pay a little bit over what, let's say we pay 5 cents a kilowatt. We charge 8 cents a kilowatt. It's still better than your residential electric. Everybody wins. We maintain it. You never have to see it. A lot of the big investors want to get involved in that. The problem in all of this is sourcing. So we early on were sourcing for ourselves, and and we got burnt big time on some several very large transactions where you either don't get the product you pay for or you get a very terrible product. So most people from the United States are looking for a US source. But anyone who's going to source from the United States has to go direct to China. And that has been a tricky process and has been a long process to get quality, reliable backed sourcing. So that's kind of what we have now. We have several sources direct to China and Bitmain, where we can get, the best pricing out there. And we can be confident that if we're fronting money or if you're putting your money with us, that you're going to get the product that you order. And that has been the biggest learning curve for us and where we lost the most money. We lost more money on bad transactions for suppliers than we ever did on coin.
Yeah.
Okay. Well, I mean, I guess it's a chance you take when you're in a new endeavor, but hopefully, the reward outweighs the risk, So
Sure.
is it something you could also do? Like you mentioned day trading before. Is it something you can do like day trade where you have the finger on the pulse constantly and you want to sell this and buy this? Or is it both where, hey, look, I have a fucking blue chip mutual fund and I'm just leaving it there and I'll see you in 30 years.
It's exactly like stocks.
Yeah. Well, yeah. Now
the
there's
exchanges are set up exactly like an exchange for the stock market.
Okay.
Like a lot of people use Robinhood for stocks and
Right,
day trade off of that. The crypto exchanges look exactly like it. In fact, they have crypto on those stock exchanges.
Okay, so it's set up the same way. You could do both if you wanted to.
Exactly.
Okay. All right. Give me some really good stories as far as like people making money
I can tell you
through
good
the
stories about
machines
losing a lot of
you
money.
sold rather.
Oh.
Well, I think one of our best stories is how we got into it.
Okay.
like Paul said, in 2017, when we were just dabbling in buying coins, and Marshall here introduced us to the mining aspect.
Mhm.
We bought one machine for $5,000 at the time. In fact, the machine that he just showed you was $5,000 in 2017, brand new, and we were mining with it in my basement.
Mhm.
All right, and Bitcoin took a tumble. It was one of those 60% recessions where it became less profitable to mine the coin than I was paying in electric, but I let it run.
Mhm.
And 3 years later, Litecoin, we were mining Litecoin, recovered, went to $400. I opened my wallet and I said, holy crap, we got a whole lot of money here. What do we want to do? So we immediately said, let's buy more machines. Let's get as many machines that we can have, because had we gone all in and started mining in 2017 and had 100 times more coin, we wouldn't even be, sitting here operating this business. We'd already be millionaires, so we wanted to immediately take that money and reinvest it back into what made the money. And since then, we've accumulated hundreds of those machines that I had running in my basement, and even bigger machines that are doing 20 times the amount of power that those ones are.
So not only were you able to pay for the machine twice over, you were also able to fund the new business that you were in, which is a hell of a profitable story.
Here's the interesting part: that machine that we paid $5,000 for, that it now goes for roughly $1,000.
Right.
So the value of the machine follows the value of the coin, but it lags a little bit. So when we hit that big spike, people were when things become not as profitable, people tend to liquidate their machines, which is the best time to buy when the coin's down. So the coin's starting to spike, and we got this money in there, and the machines hadn't caught back up. So the machines were at 10% of that value, roughly $500 a piece, and we were able to buy, I don't know, 50, 60 of those things. And as the coin was high, our what were we making a month when it was nice and high off of just turning that one machine into?
It was like $500 a day.
Yeah,
they were like $10. Each machine was like $10 a day.
Yeah.
At one point, we were making $500 a day.
That's fantastic. Yeah, that's tremendous. That's a tremendous turnout. Absolutely. All right, so cool. Good.
Now that we've dug into it a little bit more, obviously that's like an entry level machine. And it's funny. The arm wrestling community has tied back into this quite a bit. There's quite a few folks who have invested. And we've had several accounts throughout the arm wrestling community with people with serious money who have invested serious amounts of money.
That's fantastic.
I know an arm wrestler who has over $10 million worth of machinery right now.
Holy shit.
Yeah. So like serious money, like mining a Bitcoin every day type money.
That's great, man.
Yeah. And it's funny how the community kind of links up on these things. As time passes by and this stuff becomes more of a household name and people get a little bit more confidence in it, and they see the realness of it, and they see more Bitcoin ATMs and things like that, it's only going to pick up more. It's interesting too, because you don't have to be super wealthy to get involved. There's no reason that a regular person shouldn't have a passive stream of income.
Yeah, no, $1,000 is very affordable to start with. Absolutely.
Right. Now, there's obviously these things range from 1,000 to 50,000, depending on computer power.
Okay.
But yeah, it's very interesting. We've been blessed to come as far as we have. We got a long way to go here with the electrical build out and everything, but things are looking bright. And now's like the perfect time because the coin's at like a low to moderate level. So the machines are down along with it. So the people who are interested, who are looking at, like, if you go to asicminer.com, you can look up, or ASIC miner profitability. Yeah, ASIC miner value. If you look that up in Google, you can see everything that's out there, and you can see the profitability level in US dollars currently at your electrical rate right now. And that's updated constantly. It's kind of the resource we send everybody. So if somebody's interested in any of this stuff, go to asicminervalue.com. Go to the bottom, plug your electrical rate in, and see what you can make per day at the current value of the coin. And then think about the coin doubling or tripling and how much it could make.
It sounds like a tremendous opportunity for people that want to make some money, and who doesn't want to make more money, right? I mean,
well, the reality is the way that they value these machines. is like a US dollar value per hash rate. And it really follows roughly a 12-month return on investment. So like anybody who's been involved in investing, or if you've been in real estate and stuff like that, you know that you don't get your ROI in a year on damn near anything. And if you start a business, you ain't making money your first year, period. So when there's something out there that its value is tracked off of a 12-month ROI, if you really have any understanding or belief in the currency itself, it's almost a no-brainer. I started off with main investments in real estate, and I pulled back on that after getting involved in this. So
well, like I said, it sounds like a tremendous opportunity, and it sounds like it's relatively easy to get involved in. So if I want to buy a machine, how do I buy a machine from you guys? Their website? How do I contact you?
pj3mining.com.
pj3mining.com, and that will be in the description area when this video comes out.
That'll take you directly to our website. We accept various different pay formats. We're responsive to messages, and buying anything like this is not a simple thing. Like, we don't expect people to get on there. We don't have people get on there and just make purchases. There's almost always conversation and consultation beforehand. So feel free to leave a message, email, call, whatever. That's what we're here for. And it's one of those things where we're not just going to sell you a machine. All the support comes along with it. Any questions answered, machine formatted ahead of time, walk you through your wallet setup, walk you through your pool setup. You don't have to know what you're doing. It's very, very simple, and we'll hold the hand the whole way through.
Oh, that's fantastic. Okay, good.
Our business model is predicated on all of our trial and error. The story we just said about accumulating all the miners, well, we had all these miners hooked up, and we ran into a heat situation because these things put off a lot of heat, so.
Do they have built-in fans or something like that?
They do have built-in fans, but if they're taking in hot air, these things run, 80, 22 degrees
It's
Celsius.
a space heater.
Really? Holy shit.
Inside
Put it in my shed during the wintertime.
Yeah, they do.
Yeah, seriously, you heat your basement.
Yeah.
And kill two birds with one stone.
Wow.
But our facility that we built was with the notion that people are going to need a place to host a bunch of miners, because you're not going to be able to do it in your house. You're not going to have the exhaust. If you want to make a big investment, you're not going to be able to do it in your house. You could do it in the shed. You'd have to have a whole lot of electrical work done, a whole lot of exhaust stuff. You can buy your miners from us. You can send them to us. We'll run them for you. You'll just see the profit, enter your wallet. And obviously we'll charge you a per kilowatt hour price to run your miners for you.
Oh, that's even better. That's great.
Fair and affordable. And that's true passive income right there, because you just make the investment and you watch your wallet grow without having to do a single thing.
That's fantastic. Okay. So you guys not only sell the machine, but you also offer guidance. That's fantastic.
Guidance and hosting.
Yeah.
And a lot of people don't want to get their hands dirty. And I mean, most of these things are, once they get them up and running, as long as your temperature is good, it doesn't really require much maintenance. But it could need a reset here and there. It could need blown out, cleaned, or whatever. Or you might have a board that goes down. You want to be able to have, if you don't want to deal with a board going down or any electrical work, we have Marshal's our tech. He can repair the boards. So we source them and we host them. We're also on Instagram, PJ3 Mining, and we're on Facebook at PJ3 Mining. So
I'm going to make sure all three of those are in the description: the website, the Instagram, the Facebook. And you really don't have to worry about people seeing that, because Jesse and Marshall, I have a small podcast, but for some fucking reason, every time Paul Linn is on it, my shit blows up. And I'm not even kidding. I'm not even blowing smoke up his ass. Like the last one I had him on had 3,000 views on my YouTube and another 3,000 on my actual podcast on Apple, Spotify, and Google. So for some, I guess maybe it's his handsome face or something. I don't know.
I don't know about that.
He could be the face of the
Well, I actually had one girl, a friend of mine in the gym. What was her name? Blair. She's like, "Who's that guy you had on?" It was right after I put the last one on when you arm wrestled John Brzenk. And I was like, "Oh, Paul Linn is an arm wrestler." She goes, "He's hot."
Tell my wife that, man.
That's all right. She's in Jersey. You'll never get to her. She'll never get to you.
I got a house in Jersey.
Oh, do you really?
Yeah. I got a lot of places.
Oh, okay, that's cool. All right,
Not
very
not
nice.
that other part.
Yeah, not that shitty part where I live in. Yeah.